Hey guys, what's going on? It's Rekt Capital and welcome back to the Rekt Capital channel. Thank you so much for joining me in today's video about the death cross, which is right here, right now. We've seen the death cross happen on the simple moving averages, and now we're seeing it happen on the exponential moving averages. So what could we expect going forward? What do we need to look out for? And so much more in today's video. Subscribe to the channel for more videos like this in the future, and let's dive right in. So this death cross has happened ahead of schedule. It's happened ahead of schedule because since the initial crash from 65,000, we've only seen 69 days pass until this death cross has happened. And historically, we tend to see at least 107 days pass, and at most 149 days pass since the initial crash to the death cross. So if history were to repeat itself, we'd see a death cross later this year at the end of July or mid-September. But what we've seen happen is Bitcoin's price action was consolidating at relatively low levels, and in recent times we've seen such a relatively drastic pullback, pretty much consistent red days, which have accelerated the 50 EMA to just cross over with the 200 EMA and prompt that death cross. So what should we expect now going forward? Well, historically we tend to see an interesting symmetry take place where from the initial crash to the bottom, after we see a recovery, we tend to see a crash prior to the death cross equal the same amount of downside after the death cross happens. So if we just take this 53% crash from the highs and just do this to extrapolate it, then we can gain an understanding of that symmetry that occurs prior to the death cross and what we tend to see historically, that the same amount of downside happens later on. So that would essentially translate into a 53% crash from the death cross, from the moment it takes place. But there are two ways to measure this. Are we going to measure it from the actual moving averages converging and crossing over, because that would lead to a price point of around $18,000? Or do we measure it from this current price point, 53% going towards the downside in the moment of the death cross? So wherever price is at the moment of the death cross, that's where we should start calculating the downside. That's symmetrical to the downside that we saw prior to the death cross and the peak, essentially. That peak, of course, preceding this crash. And if we were to do that, to just appropriate that symmetry to this current price point, that would lead price to around 14,000. Now, this is really interesting, and I spoke about this in yesterday's video. It's really interesting because if we just focus on 4-year cycle levels, then you can see that 19,500 is the red one over here. So that's a 4-year cycle level. That's really important to watch out for because this is a 4-year cycle resistance that candle number 1 couldn't break past, but candle number 4 broke past easily. And if we just look at the previous cycle, then you can see that this red level is essentially analogous to this red level. And similarly, candle 1 couldn't break past this resistance, but candle 4, of course, also didn't break past it. And you can see how in comparison to this candle 4 was actually much stronger than this one, because we only started to see candle 1 break past this 4-year cycle resistance. But in any case, 19,500 is one 4-year cycle level, and 14,000 is the next 4-year cycle level, because 14,000 was a 3-year resistance for candle 1, candle 2, and candle 3. Mind you, this is of course the yearly chart. So this has been a 3-year resistance in the 4-year cycle for Bitcoin. So it's really interesting that if we continue this historical symmetry of crashes before the death cross being an equal amount to crashes after the death cross, no matter how you slice it, whether you're measuring it from the moving averages or from the actual price point at this time, in the moment that the death cross actually happens, no matter how you slice it, whether we see a retracement to 18,000 or 13,000, we get the 4-year cycle levels, which is really interesting to see. Really interesting and fascinating synchronicity in many ways. But where did I get this 53% symmetry from? Why am I talking about this in this video? Because if we look at prior death crosses, then in 2013, when Bitcoin peaked, it saw a crash of 73% until the death cross happened. It took 135 days for that death cross to happen. And remember, it took 69 days for this death cross to happen. So you can see how we're currently ahead of schedule here. And of course, in 2013, once we got that death cross after the initial 73% crash, we got another 71% crash to see that 2015 bottom. Interesting symmetry there. 73% versus 71% after the death cross. Similar situation here. When we peaked in 2017, we saw a 70% crash and the death cross happened 107 days, after that crash happened. And once we saw the death cross happen, 65% additional downside. So 65% after the death cross, 70% before the death cross. Really interesting symmetry. And we even see this symmetry also in the 2019 period where we had oscillating EMAs. So a lot of trend meaningless crossovers, but nonetheless, when we crashed from 13,900, which, mind you, remember, if we cycle back here, 13,900 is a 4-year cycle level right over here. In June 2019, when Bitcoin crashed, it took 150 days to cross over, to perform that death cross. But before it did, it actually retraced 53%. And now, after we got that death cross, we saw another golden cross and another death cross take place, but I generally just lump these together because we see a lot of oscillating and trend meaningless crossovers. But from this pivotal crossover here, we see a 55% retracement for the March 2020 bottom, 55% retracement versus 53 prior to the death cross. So really interesting to see this symmetry take place over time. And if we see this symmetry take place even now, then we'll probably see below 20K. And we've never seen Bitcoin retrace to its prior all-time high to just retest it as a support. We've never seen that before. So that's also quite interesting. And I'm not fudding or anything. This is just looking at the data objectively and trying to extrapolate historically recurring tendencies and trying to understand what could potentially happen. Because of course, if we do lose these levels, then we can start to look into lower levels. But can we start to look into much lower levels like these? It seems extremely unlikely at this point. But I'm just sharing the data, the historical tendencies, and what could happen if Bitcoin repeats these tendencies. So in any case, it's about just looking at the historical tendencies and trying to prepare for what could potentially happen next. Of course, I'm not going to be talking about the likelihoods of these scenarios. I'm just looking at what has happened in the past and trying to extrapolate that to the future, not necessarily guaranteeing that that's going to happen. I'm just looking at how can we objectively look at this data and try and understand what could potentially happen in the future. So will this symmetry, this pre-death cross symmetry in the retracement once again repeat? And will we see such extensively low levels for Bitcoin? It's almost unfathomable at this point after such an exponential rally. And we've seen 65,000 not too long ago, but will we see 20K? It seems a bit unrealistic at this point, but the death cross analysis here, of course, there is a lot of criticism towards it. People saying that it's a lagging indicator and whatnot. Yes, it is a lagging indicator, but as you can see from previous crossovers, doesn't matter if it's a lagging indicator or not. Of course, it's going to tell you that price is bearish after we've seen a bearish retracement, but historically it's also preceded bearish price action. And there are a few people who are also saying that, well, when we got a death cross in March 2020, that actually signaled the bottom. And that's pretty much also true, as you can see over here. But at the same time, we were seeing EMAs oscillating in a macro accumulation range at the bottom of the market cycle. So pretty much very close to the bear market bottom of mid 2018. And of course, you saw the March 2020 crash retest the top of this essential range, accumulation range, before we started that rally to 3900. So overall, a macro accumulation range and tightly oscillating EMAs, they perform trend meaningless EMA crossovers. But when you see these EMAs very far from one another because of the volatility of the preceding move, and they start to converge rapidly, this is probably one of the best death crosses or crossovers in general, when you see such volatility start to taper off and that EMAs actually start to cross over. And it's these crossovers that have preceded significant downside. Will we still see that in this cycle? It's no guarantee. Of course, it is one signal and we need to look at a variety of other indicators, but so far, since early June, I've been looking into the death cross, trying to be level-headed and unbiased about it, trying to be as objective as possible about it. And people say that I'm fudding or whatever, but since then, price has actually continued to decline. So at the moment, the death cross has been relatively accurate. But we need to see how will it continue to perform going forward. And that's about it for today's video update. Thank you so much for watching today. Leave a like if you enjoyed the video, and of course subscribe to the channel for more videos like this in the future. I'm Rekt Capital, and I'll speak to you in the next one. Speak to you soon.